Hello and welcome to another video on my YouTube channel. My name is Joris and today I'm here with a video about why selling a stock feels often so bad and how value dividend investing can help you in reducing this feeling. As you know, when you are investing, this is quite an emotional thing to do. So when you decide to buy a company, it's most of the time easy and fun. But deciding to sell a company is often difficult and also sometimes a sad event when you sell with a loss, but can also be a fun event when you lock in a profit. But when a stock then continues to rise, then you feel regret and you're really unhappy about it. So it's quite emotional when you sell a stock, especially when you already own the stock for a really long time. You went through a lot with the stock and it went up, it went down, and you followed along the journey, and then it's really difficult to part from the stock. So Hamlet, he asked the question to be or not to be, but for me, that's not a question. The question is when to sell. Especially as an investor, when to sell, it's the most important question to ask. So when do you sell at a profit and when do you sell at a loss? I think that last one everybody should have in mind as well, because when you are down on a position, a lot of people have the loss aversion thing going on. They don't want to sell with a loss. They don't want to take the loss, but sometimes it's the best thing to do. If you made a decision to buy a stock and your decision doesn't turn out to be correct, so your investment thesis in the stock was wrong and the stock goes down because of it, sell the stock as quickly as possible. I'm going to come back to that later on in the video as well. But first, more about the negative feelings that play a role in selling a stock and also the philosophies that play a role in our decision process to sell a share. And I'm going to go over 5 philosophies. So let's go on with the first philosophy, and that's you are an owner of the stock. So when you buy a share of a company, you become an owner and you grow along with the company. For a lot of investors, this is an important thing when investing into a company, but it can have an inverse effect. So it can hamper you when you need to make the decision to sell the stock. So it can feel like you are jumping off the cozy train, even when it is still moving in the right direction. So when you notice that your company is actually growing slower and slower and too slow to your liking, you shouldn't hang on to your stock just or your company just because you own it already for a long time. So you should avoid to becoming blind for things that are going wrong for or wrong with the company. So when there is a new trend jumping up, I'm going to talk about Uber and Waymo a lot in this video, or a lot. I'm always going to use those examples. So when you believed 5 years ago that Uber was the way to go and invest in Uber, and then 3 years later you see Waymo popping up and really doing robotaxi rides, you shouldn't be blindsided by it. So you should keep that in mind, and even though you are way up in the green with Uber, you should always be open to see what is going on in the world and see that robotaxi rides are probably the way to go when it comes to paid rides in the future. Then you have the second philosophy, regret minimization. So when you sell, you often get the what if feeling, certainly when the stock keeps moving up after selling it. So then investors often ask the question, what if I held on to the stock? It would be I would be up even more. I would have had 150 euros. I would have had $200. I would have had 2,000, $20,000 more than what I have right now if I hadn't sold it. But you sold it, and you thought it was the right decision at the time, You should take note, maybe you made a wrong decision, and hindsight is always way more easier than on the moment itself. So you shouldn't do this kind of counterfactual thinking. It doesn't help you to make better decisions. You can look at your decision and argue, okay, I should have looked deeper into that investment thesis, I should have done that, and I should have done that. So you should learn from your previous mistake, if it was a mistake to sell the stock, but you should also remember that the most important thing is what you're going to do next. So what is your next buy? That is the one thing you should focus on, and not the things that you done in the past and maybe were right or wrong. And most people will try to avoid this regretting feeling, and they will try to avoid selling a stock in the first place. But this is really dangerous, because maybe then they will regret even more later down the line that they didn't sell a stock. In this regard, for me, not selling Uber right now when you're well in the green, it may be a big mistake, even though it can go up even more in the future. And then you have philosophy 3 that comes around, and that's the interrupt compounding feeling that you get when you sell a stock. So you already invested for a lot of years into Uber, and you don't want to sell it because you think that over the past 5 years, Uber did really well for you. Your money is compounding and compounding and compounding. So you feel really good. And then when you sell the stock, it can feel like you are yanking a fruiting tree out of the ground. But even though it can feel like you are selling too soon, because Uber, it can still grow for 1 year, 2 years, even 3 years, even longer, because sometimes it's for a long time that a stock can be wrongly priced. But the thing is, robotaxi rides are the future. So even though Uber is still bearing fruit and it giving you apples day after day after day, Waymo is going to produce a lot more apples. So maybe investing into Google and hoping that they split off the company later on and you become an owner of Waymo directly instead of indirectly by investing into Google is maybe the correct way to invest your money. So yeah, in the short term, it can be a wrong decision to sell Uber because it can move up even further. But in the long run, I think Uber is going to go down because the market share that they will have will go down even more. So it can feel like you are selling too soon, but it is important that you realize that it's important to look at the long term versus the short term, because sometimes a stock can be wrongly priced for a really long time. And this can be either way. So it can be too cheap, it can be too expensive. And when it's too cheap, you should consider buying the stock, of course. And when it's too expensive, you should sell the stock. Because in the long term, everything is going back to the normal valuation that it is actually worth. Then we can go to the fourth philosophy, and this is the future security bias. So when you are selling an asset that is providing you with inflows that protect you, that provide you with stability and security, so here dividends come to mind, of course. So when a stock, you already own it for 10 years and it was a dividend growth stock, and you started with 1% dividend yield, and now it's already giving you 10% dividend yield on cost, you feel like it's a really good investment, because every year 10% of your initial investment comes back to you. And okay, you see that the company isn't doing great anymore, but still they are confident that they will be able to keep on paying the 10% dividend yield on cost for you, so you keep hanging on to it. But you see that the company isn't doing well anymore, you should actually sell the stock. But it feels like you are chopping away at your security of the 10% dividend yield on cost. So this is why you should never stop valuating your companies. You should always think, will I buy the stock today again, yes or no? And if you no longer want to buy it again into your portfolio, then you should ask yourself, why not? And is this a good enough reason to sell the stock, yes or no? So when you look at the stock and you see it's going to lose market share, and maybe next year, this year, okay, they will still be able to pay out the dividend that they made last year, but next year, because they are losing market share, their revenue is going down. They will not be able to maintain the dividend level. Your dividend yield on cost will be reducing. So is that then the right moment to sell the stock? In my opinion, it is. So always keep evaluating your companies as you continue to owning it. And even though I'm a dividend investor and I want to live off my dividends one day, this does not mean that a company can't become obsolete in my portfolio when it is no longer going to do what it was doing. So even though it gives you security today, it won't be doing that thing in the future. And then you should sell. And then you have the fifth philosophy and the last one, you have the investor mindset. So long-term investors don't want to sell stocks as it contradicts with their investment philosophy or their investment mindset, their investor identity. And in my view, this is crazy, but a lot of people really struggle with this one and they keep holding on to sinking ships just because they identify as a buy and hold investor. And in my opinion, this is a really stupid thing to do. So I'm also a long-term investor and I want to hold on to my companies for as long as possible because I don't want to interrupt the compounding that they are doing. But being a long-term investor does not mean that you can't sell a stock. You should incorporate in your investment philosophy rules about when to sell a stock to avoid this issue. So, in my opinion, it's really important when you are an Uber investor and you see something happening like robotaxis, that you do keep in the back of your head, man, that's going to eat away at my share of the market value for taxi rides. So, should I sell? Yes or no? You should really keep this in your consideration and maybe even decide to sell Uber. I'm going to go to the 3 good reasons to sell according to Warren Buffett. So, the first good reason to sell is when your original thesis was wrong. Then you should get out as fast as you can. So, when the facts change, you have to change your mind as well. In this regard, Uber, it was a way better model than normal taxi rides, but then came robotaxi rides. For me, this changes the facts, and when this changes, you should also change your mind in staying invested into the company that you invested initially. Then another good reason to sell is when the stock price has outpaced its business value. So that actually comes down to the philosophy tree. It can be that a business isn't priced correctly anymore, and it can be cheap cheaply priced, it can be expensively priced. When it's cheaply priced, you should buy. When it's expensively priced, you should sell. And in this regard, in the short term, the market is a voting machine. In the long term, it is a weighing machine. This is correct because the stock price is not the value of the company. It is the price that people want to pay for the company at that time, at that moment in time on the stock market. And people aren't correct every time. So when they are wrong in one direction or the other one, you should make your own conclusions and decide on that, what you want to do, either buy or either sell. And then the most difficult one of the bunch, the third good reason to sell is opportunity cost. So you should sell a stock when you need money to buy into another opportunity with higher potential. So when you see this occurring, you should sell a lesser potential stock that you own and then buy into the new opportunity that presents itself. And this is why you should always do valuations of your companies and also the new companies that you want to own, of course. But this one is a really tough one. It includes, is your original thesis wrong for the stock that you own? Is the thesis that you have for the new stock that you want to own correct? Is the stock price actually outpacing the business value of the stock that you own? Is the stock price undervalued of the stock that you don't own yet? So yeah, you are an owner of the stock that you own. That's philosophy one. What if I sell my stock and it keeps rising? So that's philosophy two. You're going to interrupt the compounding that you're doing with the stock that you already own. It's also providing you with nice dividend income. So you're going to mess up philosophy number four. And then, you're a long-term investor, so you want to own the stock for as long as possible, but you are going to sell it. So that's philosophy number five. And that's why opportunity cost, the third good reason to sell, is the most difficult one of all. And that's where value dividend investing comes in. For me, value dividend investing is a really broad spectrum of dividend investing, not really a narrow spectrum as a lot of people on YouTube claim it to be. And many on YouTube also forget the value part. They always only mention dividend investing. I'm a dividend investor, but are you going to buy it just because they are providing you with a high dividend yield? No. You're buying a dividend stock because the company behind the dividends is a good company. So you want to buy it at a good valuation and you want the company to be able to give you the dividends for the rest of your life. So the value aspect of dividend investing is really important. And in this regard, I want to say to all those other YouTubers, simplification is good, and simplification, gives you a lot of viewers on YouTube as well, but generalization is not a good thing. So value investing for me is value investing with attention for dividends, but not solely focused on dividends. I do invest in everything. I invest in stocks with high dividend yield. I invest with low dividend yield, with no yield at all, so they don't provide the dividend. I also invest in stocks that come with 0.02% in dividend yield right now, and they have the potential to give me a 5% dividend yield in about 10 years or 20 years down the line because they have a huge dividend growth potential. So I buy all those stocks when the value for me is right. But I like and love dividends for sure. So yes, overall returns matter, That is a thing that is true all over the line. And when an investor says that overall returns don't matter, they are so wrong. But it's not because overall returns matter that this means that dividends do not matter. And that is what a lot of YouTubers claim, that dividends don't matter, but that's just once again a simplification, and simplification isn't good. It's just attracting viewers, and that's something what I'm not that great at. I'm already on YouTube for 2 years. I'm only at 382 subscribers, so yeah, I'm not trying to be controversial. I'm just trying to inform my viewers about things that I think are important to know as an investor. So why I like value dividend investing as well is I'm a value investor and I love dividends, and then I tend to have less selling decisions. So I'm less coping with the 5 philosophies behind selling decisions, and thus I have less problems than other investors, especially traders. Traders, man, that's such a tough life. I can't do that. That's something completely different. But when I need to sell a stock that I own, I have buying rules and I also have selling rules for my stocks. So those selling rules correspond for 99% with the rules for selling given by Warren Buffett. So the 3 reasons to sell a stock. And I already mentioned it there. The most difficult one for me is the opportunity cost one. I always struggle with selling a stock in order to buy a new one, especially when it is providing me with a nice dividend yield. So that's my weak point. I know that. And yeah, I'm trying to work on that as well, making the calculations and trying to overcome the what if feeling when selling a stock that I own, because that's a tough one. And many investors forget to set up selling rules, but for me that is just a stupid decision not to set up selling rules. Just selling out of the blue without previous considerations, that's always stupid. So what I do is I tend to set a high selling limit. For me, that's 2 times the PE value at which I want to buy the stock at. You can see that in my U portfolio, I give the PE values for the stocks at which I want to buy, or at which level I want to start buying. So when it drops below it, I will buy even more. But from the moment that it hits 2 times that PE value, I will sell the stock almost always. Because then I think the market is overestimating the valuation of the stock. But for me, that level is always clear at all times. I do my valuations every month for my stocks, and that's how I do it. I look to my stocks not that often because I try to avoid getting emotionally attached to the fluctuation on the market. And yeah, I update my buying limits, and thus I also update my selling limits. And in this way, dividend values that I own, they are less volatile, and this allows me to buy more, or also to hold on to good companies longer than most other investors would do. And most of the time, this brings a lot of profits over time. Non-dividend paying assets or dividend growth assets are more volatile, and they tend to be sold quicker by me. So yeah, it's just because they tend to reach the higher selling limit faster. But then you also make a profit faster. and then you can move on to buying something else. So you have to look at it from the bright side as well. And when something changes to the narrative that I don't like, out the stocks go. I don't sell that often, but when I need to do it, I do it. The final conclusion is that selling is difficult, but sometimes necessary, so you should do it. When you sell a stock for a good reason and it keeps rising, you made the right decision at that time, and you should focus on the stock that you bought next. But do not keep following a stock to calculate the what if value. Keep following it to not miss the next opportunity to jump back in. This opportunity will come along. Sometimes it takes a long time, but sometimes it happens sooner than you think. And with that being said, thank you for watching to this one. Please subscribe to my YouTube channel, hit that like button as well. It helps out my channel enormously. Thank you for watching to this one and see you on the next one. Bye.